All right. Okay. All right. Do you want to try talking, Mark?
Yeah,
Okay.
testing, 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 testing.
All right. Do you want to try talking, Mark?
Yeah,
Okay.
testing, 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 testing.
Okay. I think that's working. All right. Do you want to try
All
talking,
right,
Mark?
sounds good. Yeah,
Okay.
testing, 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 testing.
Okay. Were you hearing it okay? Did you?
I mean, I heard it over your speakers.
Okay. Okay. I'm going to go public.
Oh, okay, it's live.
All right. I think we are live.
Yeah, it looks like it. Got a notification that we are live.
All right. Let me try and get a link for this.
Hey guys, welcome to the stream. A few people coming on.
All right. I'm just going to put this out there real quick. Yeah, I'm actually. All right. I think we should be good to go. Let's see. Maybe give it about 30 more seconds. Let some people come from the link I just posted, and then we can get started.
Okay, sounds good.
All right. I think we could get started now. So give it maybe just one more second here. All right. So what's up, guys? Welcome back to DCA. I'm here with Mark from Upside Down Data tonight. Joe, unfortunately, was not able to join us, but he's still around. So I've obviously been away for a while now. I don't think I've made a video in about a month. That was entirely unrelated to, and anything to do with the crypto market or anything else, or me quitting my channel. As many of you know, I'm a physician, and I actually had my licensing exam for radiology uh, last it was last week at the end of the week. So I was basically studying for that. That's what it came down to. So there's only so much time in the day, and we're back now though. So I think the market was waiting to implode for me to finish my exam, which was very kind of it. And
I caused the implosion, maybe.
yeah, exactly. So I think we're, ready to talk about it tonight. So, Mark, what do you think? Basically, maybe we'll give a rundown of what happened over the last couple days before we, start discussing it.
Yeah, definitely. So I'll keep this brief because I'm sure most people listening have heard at least most of this. But the drama all started, I guess, it was about a week ago or a little bit longer ago when this whole thing happened where CZ, the CEO of Binance, kind of came out and announced that they were planning on selling their FTT tokens that they held. They were doing this in response to a leaked balance sheet from Alameda Research that showed that Alameda's biggest holding was FTT, and they actually had taken out a bunch of loans against those tokens. People, obviously were concerned because that's kind of just like fake money. It's all just from FTX, which a lot of people saw as being, more or less the same thing as Alameda, even though they're supposed to be separate. So when that happened, that caused the price of FTT to tank because people, Binance is going to be market selling basically $500 million worth of FTT. People wanted to get the heck out. That obviously was going to cause a lot of problems for Alameda because they were so heavily leveraged against FTT. So then with all those concerns, what ended up happening was that people then started getting concerned about the solvency of FTX itself. And it led to this huge bank run that we saw where I think it was somewhere around $5 or $6 billion worth of withdrawals over like a 48 to 72 hour period, which FTX could not handle. And now we know why. It came to light after that FTX had been dipping into consumer funds to loan directly out to Alameda Research. There's actually some new reporting that Sam Bankman-Fried had a backdoor put into their accounting software so that they could basically loan out infinite money to Alameda without it triggering any red flags within their internal compliance systems. And so the long and the short of that was that I think that they have somewhere on the order of $9 billion in liabilities to about $900 million in assets. So completely insolvent. And then the big drama that happened last night was that FTX was hacked, FTX and FTX US, after they filed for bankruptcy just earlier in that day, which then, was obviously very suspicious timing that this big hack happened. I think it was around 300 something million dollars that ended up ultimately being stolen. And I think that the dust is still kind of settling from that. So that's my recollection of kind of the main events. But Jay, if there's anything I missed, feel free to jump in and add that.
Yeah, well, there's just a couple things, and these are mostly speculative things. But first of all, I have a tough time believing that, this leak just kind of happened on its own. I have a feeling that CZ had a lot more to do with everything that happened here than he was just some innocent bystander who happened to read the report with everyone else. Because the FTX token, if I recall correctly, started falling in price, and they were trying to defend that 22-cent peg prior to the report coming out. I
think the report actually came out earlier, is my recollection. I think it was actually like a week or two earlier. And at the time, people kind of raised an eyebrow, but they weren't all that concern. Like, it didn't really make too much of a splash, other than people saying like, oh, it looks like Alameda might be a little bit too heavily in with FTT, or that might be a little bit overexposed to it. And then I think the defense of the $22 kind of, because so the CEO of Alameda said, we'll over the counter buy all of your FTT, from Binance at $22 per.
Right.
And
Right, yeah,
FTX said,
$22,
we're going to sell them on the market. And then presumably is Alameda trying to hold that value, which then they lost. So yeah, that's a good point, because that was really what triggered the whole thing. Is when that $22 level failed, then people were like, well, wait a minute, what's going on here? Like, do they not actually have enough money to buy all of that FTT, which they kind of claimed that they did? And then, yeah.
Yeah. And, I wonder, how did this leak come to light? Corporate espionage is definitely, a known it's a known factor that plays a part in a lot of what happens behind the scenes. And I have a feeling that, there may have been some money trading hands prior to this report coming to light. So, and then of course CZ was there to kindly put the nail in the coffin. Although, I think this may have benefited him he may have had a long-term goal here where he, takes out a big competitor. But I think there may be a lot of collateral damage here that ends up costing him more money than this is going to ultimately make him from whatever type of increased, user base he'll gain from people that were previously using FTX. But I don't know if you have any thoughts on that.
Yeah, no, I agree. And so I mean, the way I kind of see it is that I kind of wonder if CZ didn't realize exactly how bad it was for FTX. I almost wonder if this is a place where he saw an opportunity to really land a big blow, but not necessarily one that would basically wreck the whole crypto market. Because, as you were saying, like it just seems unlikely that if he would have known how bad it was to topple this whole house of cards, with all the regulation this is going to invite and all that kind of stuff, it just seems hard for me to believe that he would have seen that as being the attractive option.
Right.
I almost wonder if he thought that FTX was in a slightly vulnerable position, or at the very least Alameda was, and that he could just land a big punch, kind of scare people, and then maybe steal some market share, but maybe not completely collapse them. Or if it was the case that it became the case he could acquire it, that it would actually be an attractive option to acquire them, instead of what it ultimately was, where once he saw the books, he was like, I'm not going to touch this with a 11-foot pole. It's so radioactive. But that's, again, just pure speculation. I have no idea. It's possible that he knew exactly how bad it was and he just is playing super hardball and doesn't really care about some of that broader damage. But I don't know. If anything also that we've learned from this, you can't trust billionaires or crypto billionaires. So it's totally possible that he was totally self-interested and saw this as being beneficial in the long run.
Right. Yeah. At the end of the day, this whole narrative that, Sam Bankman-Fried, he's this altruistic guy who's out here doing this and that because he really cares about crypto. That whole narrative, 95% of the narratives that build, or, they build this core tenet of the crypto market, they're bullshit. Because at the end of the day, you have individuals who, they make this type of money where they become the top 500 richest people on the planet. And you think that they're just, acting, they prior to this, they were in the vast majority of cases, just regular guys. And within the span of a year or two, they, gain wealths of billions of dollars. And Sam Bankman-Fried, he's saving the crypto market. He's out there doing everything he can to, try and bail out these bad companies. All he's doing is trying to line his own pockets at the end of the day. And, you have all these creators out there. I posted some on Twitter, people talking about, what an amazing guy he is. And, he's saving the crypto market and, you need to follow what he's doing. And it's just a bunch of BS. And you've noticed, if you've been involved in the crypto market over the last year, most of these narratives that you hear that are repeated over and over and over again until they obtain meme status, they're BS and they don't have any bearing on, in reality whatsoever. So.
Yeah, absolutely. I mean, I think my general rule of thumb with market participants is that assume everyone's out for their own best interest, and especially the people who have made billions, because you usually don't make billions unless you're doing things that are not in the best interest of everyone else. Like, it's awfully hard to become one of the richest people in the world doing stuff that's benefiting everyone else. You're really having to do something that's giving you an edge, and frankly, probably taking a lot away from other people. And I mean, there's a lot of stories about how predatory Alameda research was and how FTX was basically trading against their own clients by feeding market flow to Alameda to help them do things like liquidate people and all that kind of stuff. Some of that speculation, we don't know exactly the extent to which that happened, but I think it's highly likely it did. Some people are speculating now that the whole reason that SBF even made FTX was that he realized he could make Alameda more profitable. And so this was all kind of about Alameda from the very beginning, which maybe explains why he was willing to sacrifice a profitable business in FTX to prop up this failing hedge fund that was just burning money like crazy, which a rational person would have just cut Alameda, a long time ago and just let it go. But,
Right.
it seems like his allegiance was not to FTX ultimately. And then, of course, his allegiance was in no ways to the people who were giving him his customers, to his clients. He clearly had no concern for them in the end at all. And that's what's, I think, so despicable about this, is that the whole time he was pretending that he's like, oh, I just want to make people whole and I just want to protect consumer clients. It's like, yeah, right. You don't build a backdoor into your accounting software to steal funds if that's your primary concern. And yeah, it's just a total grift and a total scam. And it's one of those ones that I just think it's just unfortunate because it's so hard to see coming, because it's so opaque, and because it's a centralized entity, there's just not a whole lot that the general public knows. I mean, there's some people who are getting a little suspicious ahead of time, but it was, it's not the kind of thing where you reasonably would expect anyone to have seen this coming, in my opinion.
Yeah, I don't think it necessarily, no one starts out with, typically people don't start out with some nefarious plan to, create this this Ponzi scheme, essentially, where you're robbing Peter to pay Paul. But I think it kind of morphs into that as, as they start making money, they make their first 10 million, and then it turns into 100 million, and then it turns into a billion, and then greed just sets in. And I think that's absolutely how you get these runaway spirals. And especially when it's like one guy is at the top of the pyramid and he's essentially acting unchecked, where he's putting back doors into the, into the network, where only he, as I understood it, he was able to essentially transfer these funds, alter the numbers as they appeared, so the rest of the executives would not know that this was happening, and it would still look like everything was, everything was a-okay on the front end. But in the back end, all the money was moving, and by the time someone realized. So is it confirmed at this point that he was actually the one that, so he transferred the money over to Alameda?
Right.
Now, I read some reports this morning that it was being sold. A lot of these funds were being sold. Did that turn out to be true?
So like once Alameda got their hands on them, like
right, once they were transferred over today.
Just today?
Yeah. So, well,
the hack, is that what you're referring to? The hack?
Yeah, the quote unquote. I mean, from what I gathered, this is, it's not really a hack if you're the one who owns the software.
It's that job more than likely. Right. Yeah, no, that's a good question. I haven't heard exactly what's gone on with that. I mean, the thing about it is, because it is a improper, like frankly illegal movement of funds, I suspect they wouldn't be able to liquidate it on any exchange, because they probably blacklisted those addresses. So probably the most that they can do with it is just do stuff in DeFi, which is maybe a little bit limited. So it kind of wouldn't surprise me if those funds are going to be a little bit like some of the hacked funds from exchanges over the years, where it kind of becomes hard to do anything with it, because everyone knows what it is. Everyone knows they can track it super easily. So I'm not really sure. And maybe that's why the market hasn't really been hit all that extra hard. Like I was originally expecting, Bitcoin to dump or other assets to start dumping if, all those funds started getting dumped onto the market.
Right.
But part of me thinks that they weren't really able to do that, because otherwise it just seems like the market would have reacted more heavily if that much sell pressure would have hit. And then of course that would have created just extra fear, which would have created more sell pressure. So I'm not sure. I mean, so I guess I'll just say I'm not really 100% sure. That's my only insight to that.
Yeah, it's funny. This type of shit always happens at 4 a.m. Eastern time on, a Saturday.
Right.
Whenever this news comes out, or whenever someone does something nefarious in the background, it's always at the lowest volume time possible, so that they can kind of operate. No one's going to realize, for at least the vast majority of people won't realize for another 3 or 4 more hours, at least, in the US market.
Yeah, exactly.
Which is where a lot of the institutions tend to be that are.
Right. Yeah. And if their goal is to try any kind of market manipulation, that's a one of the best times to do it, because that tends to be when the order books are thinnest, is those times. And so,
yeah.
I mean, who knows? Maybe they were going to try that. Maybe they had some grand plan of like dumping a token and shorting it, or who knows? I mean, it's just such a nightmare.
Yeah, definitely.
Right now, it's hard to see it.
So I guess what is your take on the long-term ramifications for the crypto market? Because at the end of the day, whatever happens in the next week or the next month, I don't think that's necessarily so important. Although I do think there's something to talk about there. But what do you see happening, or do you think there are any long-term ramifications a year from now, 2 years from now, 4 years from now, in the next bull market, if there is a next bull market?
Right. Yeah. I mean, that's a fantastic question. So I think definitely massive ramification for this. I mean, people have been talking about how this is the biggest thing that's ever happened in crypto, like even bigger than Mt. Gox or BitMEX blowing up and that kind of stuff. And I think that's fair, because the thing is that, when Mt. Gox happened, crypto market was so much smaller that it's way fewer people got ruined like this. Way less wealth got destroyed. Whereas now, in absolute terms, this is orders of magnitude higher. I think I've seen numbers as high as, this could be, as high as 50 billion in terms of the whole kind of liabilities between Alameda and FTX. That's the high end, but it's massive. So the one thing I think is, if it was already highly likely, it's now guaranteed, is regulation. I mean, there's no way regulators are not going to do something in response to this. My hope, and again, this might be a silly hope, but my hope is that we can get some good faith regulation, because my take on regulation in crypto has always been that it's not necessarily a bad thing depending on what it is. I think there's this kind of knee-jerk reaction in crypto that's just this immediate thought that any regulation is terrible. But, if you can get regulation that stops exchanges like FTX from being able to become these monstrous, Ponzi schemes, I think generally speaking, that's just going to be a good for the space. If you're not going to be able to have this, if you're going to have a more fair market, I'd like to see my, bull markets be driven by actual trading rather than these, massive firms just creating a big Ponzi scheme that was going to blow up and ruin people later on. So one thing that is interesting about this, and actually just now I saw that this happened, where it's looking highly likely in the US that we're going to get a split Congress. So this is separate from like the SEC and CFTC. They're going to do other stuff probably before Congress does anything. But to the extent that Congress probably will do something, it's looking highly likely we're going to have a split Congress, where the Senate now just got called for the Democrats. Nevada just got called for the Democrat, which gives them 50 seats. And the House is still very close, but it's looking more likely than not that the Republicans will eke out a majority there. So one of the things that's interesting about that is that if that does happen, a number of more crypto-friendly Republican Congress people will actually take chair positions in some of the different committees that are relevant to crypto regulation. And there are certain bills that are already bipartisan that are, generally speaking, seen by crypto people as being, more good than bad for the space. So there is a path for there to be some actual useful regulation to get passed, especially if it's Congress-led. Who knows what Gary Gensler's going to try to do in the meantime. I don't really have any faith that he's going to do anything in good faith. But to the extent that Congress gets involved, it's possible we could get some decent regulation, which ultimately I think would then be a benefit for the space in the long term. Because if we can break this cycle of it having it be that every single bear market we have this massive catastrophe of something blowing up and ruining a bunch of people, that's good long run in my eyes. But who knows? It's not necessarily my base case. I also think it's totally possible that Congress is also going to act in bad faith and just try to ruin it as much as they can as well. So just something to keep an eye on going forward. And then the only other thing I'll say before I pass it back to you, Jay, is that I think the other thing that's happened is that the image of crypto was already bruised from Luna and Three Arrow Capitals. Now it is beaten to the ground. So many retail people are not going to touch crypto for potentially years because of this. People directly impacted for sure. It's going to take a lot to get them to come back into the space after this. And I do think that for a lot of other people, memory tends to be short, and they might not, a couple of years, they might not really even remember this news story if they weren't directly impacted. But it's going to take time for those wounds to heal. And that's where I've seen some people on crypto Twitter just trying to pretend this is like the COVID crash and we're going to go parabolic to the upside coming out of this. I'm just like, what are you smoking? Like, that's there's no universe in which that's going to happen. If anything, we're going to go, at best, we're going to go sideways or down from that perspective. So I'll pass it over to you, Jay. I'm curious to hear your thoughts of what the consequences are.
Yeah, so I think there's a few ways to look at this. First of all, like you were saying, the government is going to have all the ammo they need to take a negative regulatory approach towards the crypto market, if they didn't already have it, which I feel like they did. But if there was a question about it before, now it's a certainty. In fact, we spend a lot of our time talking about the crypto market, thinking about the crypto market, analyzing it. Basically a lot of my free time now is directed towards the crypto market. And even from my perspective, this is just an absolute shit look for anything to do with this market. Now, from the other perspective, if you look at the DeFi side of the coin, which is the truly decentralized dream of the crypto market, that has operated essentially as we would hope that it would. The DeFi market has been more or less a safe haven where the centralized exchanges or these centralized, basically you're giving a centralized company your money, and they're calling it you're calling it a deposit, but you're really just giving them your money, and when they inevitably go out and lose it, they have they aren't required to return it to you, as we've seen. Or they'll steal it or whatever happens. So I think on one hand, this is a really bad look for the crypto market, and on the other hand, over on the DeFi side of the coin, things have been more or less acting like we would hope that they would, and that's because there's no in most cases, there's still hacks and there's things like that we have to worry about with DeFi, but everything is handled by the algorithm on the DeFi side. So, it becomes much more difficult for someone to go out and lose all your money, like we've seen with SBF, like we've seen with, Doquan and whatever's happening over there, or whatever bad actors coming in and essentially tanking the value of the coin in the case of Luna UST. Or even with the case of CZ and and the FTX token. So, overall, though, I think that from the regulatory side of the coin, it's going to be a huge negative for the market. Now, when you look at perhaps the more important side of the coin, which is the institutional involvement, consider this. You had institutions, you had pension funds investing in FTX that just lost all of their money, just poof, gone. And pension funds are, they're the cornerstone of stability. They don't like to go out and lose all their money on an investment because it ended up being a scam. So how do you think that is going to play out over the next couple of years? Institutions are going to flee this market. There's already a regulatory climate that does not really allow them to invest heavily in the crypto industry in terms of investing in crypto assets. And, that's a whole nother discussion, but there's already a negative, it's stacked against them where it becomes difficult for them to, based on whatever their requirements are for the types of funds that they're holding and the types of assets that they have on their books. So now that's essentially become impossible. The talk of, the institutions are going to be FOMOing into the crypto market. I just think that that's a pipe dream at this point. At least, you have years before I think anything even remotely close to them being able to enter into the market becomes viable. And ultimately it's going to be I think what we're seeing right now is essentially a 2000 type event for the crypto market, where a lot of these fringe coins that are built on nothing but hype So a lot of these layer ones that, it's just hype. They have absolutely no users. They have absolutely no use case. They have absolutely no apps built on top of their layer one. I think you're going to see those continue to bleed, and then they don't necessarily ever have to go to zero, because this is the crypto market, and shit from 2013 still hangs around with that used to have $1 billion market cap, and now it's worth 0.0001 cents per coin. But
Right.
I think they're essentially going to go to zero now. And so I think a lot of people holding all of these fringe altcoins, I really think that we're going to see a reckoning in the market overall.
Yeah, no, I 100% agree. And it makes me wonder if the shape of the market itself is going to have to change before that can change. I mean, one of the things that I've felt like is going to catalyze the next bull market is when real utility comes out of the crypto market, where it's no longer just speculation and hype that's the only thing that gets people into the space, but there's some actual problems that get mainstream adoption that crypto is necessary to solve. It seems like is going to be important. One thing I did want to follow up with the DeFi, there are a few comments which I think were good comments here about DeFi hacks, and if that kind of cuts against how DeFi has held up so well. I think there's different ways of thinking about it. I mean, I think one of the reasons we've seen so many DeFi hacks is because a lot of those protocols were built in the hype cycle of the bull market, where everyone was just rushing so fast to get their protocols out and up during the bull market that they didn't do nearly as much due diligence at the front end as they should have. And so now we're really, those hacks are, I mean, it's a bad analogy, but it's sort of like what we're seeing with some of these centralized entities, where the bad ones are blowing up because they have vulnerabilities. And then the good ones, like your Aves, your compounds, your Uniswaps, just keep chugging along and have had no issues whatsoever. So I think that's going to be another thing that's going to happen in this bear market, is that the bad DeFi is also going to get flushed out. And we already saw this early on. It was the worst DeFi got flushed first. All the ohm forks and all the massive Ponzi scheme DeFi protocols got wiped out first, and now other ones are as well. And so I don't think that DeFi is flawed in the sense that, as a concept. I just think that it's oftentimes sloppily implemented by people who are just trying to prioritize speed over security. And so that's the other thing moving forward, that you'd hope there might be some better systems put in place. I think there was one, I think it was Phantom had an interesting, I don't know if this is going to work, but they had an interesting update where they actually have an automated auditor for DeFi protocols now, I think. I don't know exactly the details or how good it is or how exactly it works, but essentially the idea is that anytime you launch some new protocol with smart contracts, et cetera, it's able to do some kind of auditing to catch potential bugs and things, so that you can catch it, early before it ends up becoming a huge potential problem. So to the extent that things like that might be feasible and could be done in a more audible or automatic way, that could be a way of getting around those issues also going forward. But it is a definite fair point about DeFi hacks, and that's certainly something that if it just doesn't ever change, then that would be a big problem for DeFi if ever getting larger than where it is right now.
Yeah, definitely. I think a lot of times it seems like, and I'm not going to sit here and act like I know what hackers are exploiting or how they exploit it, that type of thing. But it seems like a lot of times these bridges are kind of the thing that's getting exploited. And so I think ultimately the industry has basically a good look in the mirror it needs to take. Because I think essentially, everyone had their beer goggles on through 2020, 2021. And now the lights have come on, and the crypto alcohol content has come down a little bit, and they're seeing a little bit more clearly. And I don't think people like what they're seeing in the mirror anymore.
Yeah, absolutely. It's wild. So one other thought I had, I'm curious to get your take on this, Jay. This is pivoting a little bit, but I do think it's relevant. So one of the things I was actually thinking about throughout this whole FTX debacle was how useful crypto Twitter is for getting the word out about stuff really early. So like, if you're plugged into crypto Twitter, you probably knew before anyone else about the concerns about FTX. It's probably those kind of people who would have been able to take action early to get their funds off and not gotten stuck with it on. And one of the things that people have been talking about more recently is with all the chaos around in Twitter and the rumors of the possible bankruptcy, et cetera, of basically Elon Musk not being able to get Twitter to work just based on the way that the amount of debt that it has, and then the problems that they're having with advertisers. I'm curious of your thoughts of how important crypto Twitter is. Like, if it did go away, do you think that would also have a material effect on the crypto market going forward? Do you think we would just find a different hub? I'm just curious of your thoughts, because it is interesting how central Twitter has become to the crypto community.
Yeah, I think Twitter, probably it's the type of thing where, it does a lot of good, but it also does a lot of bad for the market, because there's just this propagation of just absolutely terrible ideas, where, people, for instance, it's how people like Plan B get such notoriety, because there's just this, catch it and pass it on type event where he says something ridiculous, and then the fringe members of or not even the fringe members, but maybe less informed or less educated on financial systems, those people take it, they retweet it, and it becomes gospel for this massive subsection of the population. And so I think Twitter does a lot to misalign people's expectations with reality. And that's tangential to your point. But so in that sense, I think Twitter becomes a huge negative on the market overall, because it propagates misinformation essentially. As far as the benefits, I do think, well, first of all, you say if it goes away, that's, is that just a hypothetical, or did I miss something else?
Like, for now, it's a hypothetical, but I don't know. It's just like in the worst case scenario where Twitter goes bankrupt and for whatever reason no one buys it out and maintains it, etc. Or at the very least, if Twitter as we know it right now is no longer a thing.
Yeah, so I do think it's important, because like you said, it becomes a method where anyone connected to the market, or anyone with an interest in the market, can essentially instantly learn about what's happening. And news sources aren't going to, a lot of different news sites aren't going to put that type of information out. And especially not everyone is going to be kind of connected to the same news network, but Twitter makes it so that if any, no matter which news network puts that piece of information out, it goes on Twitter, and then instantly, imagine it like for politics, maybe Fox News gets a story, or CNN gets a story, or, NBC gets a story. Now it doesn't matter who gets the story first. It goes on Twitter, and now everyone knows about it. Or, anyone who's connected to this industry knows about it immediately. And so in that sense, I do think it's it's a positive, because people can kind of react to the story immediately. Although algo bots exist almost solely for the purpose of, they know how you're going to react to any given news story, and they're able to front run you on it. And then, by time you read that article, if you read it the instant that it's published, the algo bot has already read the article and has already reacted to that news article before you can even click the link.
Right.
So, and I think that's why I never do anything based on news, because, fine. If I hear that, if I own FTT and it comes out that FTT is, going bankrupt, or, FTX is going bankrupt, and, we're sitting at $5 down from 22, maybe I'll sell it because it's going bankrupt. It's going to zero essentially. So you might as well get out. In that type of event, it's fine to act on news, but a lot of people will try to trade on news, but you're not going to beat the algo bot. You're just not. You are an amateur investor, even if you're, unless you've been doing this, and you have all the software to kind of back you up, and you yourself have algorithmic trading capability, you are not going to outtrade the crypto market. And that's why I think a lot of times technical analysis can be kind of beneficial in the crypto market because we're essentially playing a game where we see that a lot of the daily volume is short-term trading. The vast majority of crypto trading happens on the short-term volume scale. And so you have professionals playing the game versus amateurs. You have an NBA team playing against a high school team. And so the patterns are very predictable because the retail market is very predictable. And, I think that's something that on my channel, and I think probably you guys as well, we've tried to instill the idea of, longer term thought processes because it's easier to win the game when you're doing that compared to, trying to out trade an algo bot that's instantly reacting to news stories and knows on aggregate exactly how you're going to react, in accordance to whatever comes out.
Yeah, absolutely. I think that's a great point. Yeah, I mean, just as an aside, when you were talking about that, this is not crypto, but I remember Eli Lilly, there was someone who impersonated their account on Twitter recently because it became easier to do that, and they went down like 20% off of a fake news story or something like that. Some crazy thing, and yeah, you can't. So I mean, that was someone taking advantage of it, but yeah, it's pretty absurd how strong those bots are.
And think about it this way: the second it comes out that it's a fake account, the algo bot instantly knows that, buys up all of the shares at the cheaper price, and then, you're trying to get back in 15% higher than you just sold at, or 20% higher than you just sold at. So it's a losing game.
Right, exactly. So I guess another question. I mean, this is similar to the long-term outlook, but this is more price focused. I'm just curious your thoughts of where you see. Let's focus on Bitcoin again. I guess this is the main one. Kind of where you think some price targets are for where we're going from here. So, going out 6 months, a year. What kind of price targets do you think we might hit going out there? Just kind of what's your base case now?
Yeah, so let me just say this in conjunction with that. I think when we saw the the inflation rate come down, what was that, on Thursday, was it?
Yeah, I think so.
It was the day after the SBF thing where we had just dropped, the whole market dropped about 25%.
Yeah.
You should thank your lucky stars if you're a crypto investor that was the order of events, because if that CPI would have came out hot and inflation would have been over target, let's put it this way, 25% would have been the very beginning of, of all your problems, because you saw the NASDAQ just go up, 7% one day and then like 3% the next day or something. Just an insane rally in terms of percentages. I mean, that was one of the biggest rallies. It may have been the largest single day rally. I don't remember the stat, but it was in quite some time. And in the face of that, you saw the crypto market. Yeah, some of the most hit altcoins like Solana had pretty significant rallies, which they've already given back a lot of that. But I think if that wouldn't have come out positive, the market would have been absolutely annihilated. You could have been looking at down 50% from already depressed prices or more for a lot of things. And what Solana was down like 70% or so, from
like 40% on a day. In the worst of it, I think that was Wednesday. It was down like 43%. And then it was 20% the day before.
Yeah. And let me just say this. I hope that some of you guys talking shit back when I was telling you that altcoins are going to get wrecked in the bear market, saying that they can't go down 90% anymore. I hope at least one of you's in the chat right now. Because, this market is so predictable, not on a day-to-day basis, but on a longer term basis, the market is extraordinarily predictable in that when the bear market comes, and, they're all going to come, because it's just, quite frankly, unsustainable to have these speculative rallies where people are buying just absolute nothing. They're buying a coin that some guy in Vietnam made, and, called, named it an animal plus plus a verb or something. And then it's, gets a market cap of $200 million. and then it's back to, $1 million market cap just a couple of days later. And how can that type of market be sustainable? And so it was, just frankly, it was obvious that this was going to happen. As far as, and another thing I'll say, these things happen in bear markets where you see Luna go under, you see Celsius go under, you see, what's it called? FTX go under. These things happen because, it's very likely that if the market were still in a bull market and, the macro situation were different, maybe FTX gets that bailout loan that they were looking for. Maybe, it's very likely that they don't go under in the first place because the sentiment is high enough that the retail market is able to prop the market up. But when the sentiment is shit and the macro circumstances are shit, and you have some billionaire like CZ acting against you, this is going to happen. It's just like Luna. It's just like Celsius. As far as what I see going forward, so, I have a hard time seeing the market, the crypto market, and even the broader, the stock market. I like to look at NASDAQ as it relates to the crypto market because I think they're kind of more correlated than something like, S&P. But I see a difficult time going forward because I don't think the Fed, just because we had one slowdown in the, the inflation reading, I don't think you're going to see the Fed back off from here. I think you're going to continue to see at least a 50 and possibly another 75% rate hike. And, the Fed funds, the terminal rate came down after the lower CPI reading, but it came down to the place it was last week. And people are talking like there's just this amazing event that occurred. But I think it's people just looking for, something positive in a market that's essentially been nothing but bad news going on a year now. So
Right.
As far as Bitcoin goes, if I had to pick a price target, and this were if some of the more negative things that people are expecting do start to play out, where we see energy costs start to rise and that sort of thing, I see the DXY continuing to rally potentially. And I think from there, what you're going to see is, I kind of think our support level forms at around 12K. And from there, it just depends on how long the grind of the bear market continues. Does it happen for another year? Is it 2 years? Because you do have support all from 12K all the way down to, whatever it is, 3K. And I don't see a crash below 12K. If we do get to 12K, I kind of see it as being like a grind into those support levels. I kind of think of it as like drilling into, or trying to shovel out like a mountain or something like that. If the support's not very deep, it's easy to cut right through it, which is what we see at some of these prices that we've cut through. Like when we went from 30 down to 20 almost instantly. It's because there was no support in the 20K region. It's not until you get down to around 20K, where we had that prior all-time high, that you start to form higher levels of support. And then from here, there's not really much. There's a little bit at like 14K, and then until then it's not 12 or 13K. And from there, then there's just a steady million coins every $1,000 all the way down to around 3K.
Yeah. No, I mean, that's my exact same outlook. I mean, I think you're good to call it the DXY. So I do think of what that does is going to shape a lot of what happens with crypto, in addition to because really, the DXY is a reflection of a lot of those macro forces that you're talking about inflation and, what's going on elsewhere in the world, et cetera. And I mean, what's interesting about it also, like, I think I put out a video back in October where at that time, if you basically built a model predicting where the price of Bitcoin should be based on factors like basically adjusting the normal kind of time-based logarithmic curve to account for the DXY. The price target it was giving was like 13K, like 12, 13K. And then on chain, as you were saying, I mean, both technical support level and just on chain support is all sitting down at around 12, 13K. So that is a level that I think, because there's not a lot of support, there's some support now where we are, but not a ton. It just seems likely that price is going to gravitate towards that lower level. But how deep we go really depends on how bad things get. I do want to respond to some of these comments about the relative strength of altcoins, at least since the June lows, and if that means something is different this time around. I mean, that is something that I was paying attention to during that time. It was in some ways strange that Bitcoin wasn't performing better during that whole time than altcoins. One thing that is possible, though, is that ETH kind of stole a lot of the thunder from Bitcoin during that whole time with the merge narrative and everything like that. Yep. There's a lot of money that in other cycles might have found its way into Bitcoin as a safe haven that this time around got itself into ETH. And so part of what we're seeing with the relative weakness of Bitcoin could be a reshaping of what people see as a safe investment in crypto, where ETH now is getting a lot more of that status than it ever had before. And so in some ways, Bitcoin dominance might not even be the right thing to look at anymore. It might actually be something like a Bitcoin ETH dominance, as seeing that as like the blue chips relative to the rest of the crypto space. And I would suspect if you looked at that, then the combination of Bitcoin ETH has probably held up a lot better than maybe just Bitcoin on its own. Now, that's not to say that there aren't certain altcoins that have done better than either of those. I think Quantmatic were called out, of course. But that's also ignoring all the, garbage Solana tokens and all the garbage, AVAX tokens that have just been dumping like crazy and, are just going to zero, basically. Now, those are smaller market cap, but, relatively speaking, they're getting hammered pretty hard. So I think personally, I just think it's a little bit premature to say that this time is different, that the paradigm has shifted. I still think that quality is going to rise to the surface the longer that this grinds out, and that, there might be some high quality alts that also hang in there decently. But generally speaking, I'm not one who's going to be sitting here thinking that, something sitting at number 50 on the top 50 right now is going to hold up as well as Bitcoin over the next year. That's just my take on that, though. But Jay, I'm curious to hear your thoughts.
Yeah, I mean, I'm just reading this guy's comment about Luna C or Luna Classic being are you really making the argument that because Luna Classic has rallied from 2x, that how am I then drawing the conclusion that Bitcoin could go lower from here? In fact, I'm pretty sure that this guy's been in prior streams saying that Bitcoin can't go lower from here, back at 30K and back at 20K, and here we are each time lower from there. And so it's that type of attitude towards the market that I think repeatedly gets people, is that because whatever junk coins 1, 2, and 3 are up 2x from where what's the market cap? The market cap we had a $3 trillion market cap. Now we have a $800 million market cap. So last week we had $1 trillion market cap. Mm-hmm. So that's how I can, suggest to you that Bitcoin's very likely to go lower from here. The economic situation has a bigger impact on the crypto market than anyone was willing to admit. Essentially, people thought that because the crypto market's doing well during a massive market rally where interest rates are near zero, European interest rates are negative, that once things come back down to reality, that that's going to be able to continue. Carrying that debt now, that massive leverage position where essentially, as you were saying prior to us starting the stream, it's this incestuous lending that created this massive market cap where it just wasn't sustainable, because a lot of the valuations of these tokens are built on nothing but company XYZ giving money to company ABC, who gives company DEF that same money, and then it just, continues. And then when one of them down the chain eventually goes bankrupt, which we've seen over and over again, then it has a spiral effect. And that's something I think we should actually talk about. Would be, what do you see as being the contagion from here? Because if you recall back to Luna, what happened? Luna crashed, the price stabilized for about a month, and then what happened? Yeah. Then we really tanked.
Yeah.
And so I think, do you see that happening here? Do you see there being a downstream contagion from?
Absolutely. And I think the open question is if the market has priced in enough the amount of contagion that we're going to see. Because I think one of the things that was interesting is, we got the Three Arrows Capital and Celsius meltdown, which brought us down to the June lows. And there was some contagion off of those, but it wasn't enough to really dump us down that next leg. It took us FTX to do that. So I think it's going to be a question of how big the players are that get hit. I mean, I think it's basically a guarantee that in the next months, everyone's going to claim that they had no exposure to FTX or everything's fine, but there are going to be other ones that go. I mean, the first one that's already, fallen is BlockFi, because I think, I don't know if this is official, but basically what I've heard is probably true, is that FTX kind of forced them to move all of their customer assets onto FTX, which they were probably just using to prop up their own hole that they were digging themselves into. So BlockFi probably just literally didn't have anything of its own, and then when FTX blew up, then so they immediately halted withdrawals and everything went to hell. But I think we're going to see more of that coming up down the line. And my hope, and it's possible that even some like smaller exchanges that had lines of credit with FTX or some overexposure might get hit with this. My only hope is that we don't see big players like Crypto.com or God forbid Binance. If Binance were to go, then we would all go. I don't think that's likely. I don't think that they probably have that much exposure to FTX.
If Binance goes, we're fucked, is the bottom line.
Yeah. So
you have no market. If Binance goes, that's what people don't realize. If Binance goes under, there's zero market liquidity because all of the trading volume happens on Binance. So if it goes under, I was saying in the Discord the other day, you have digital paperweights essentially because they're worthless. There's nowhere to sell them. There's nowhere to buy them. Coinbase, but Coinbase has its own slew of problems. But
right. Yeah. No, I mean it's the end of the end of the crypto world at that point, and things go way lower. So I think we're just gonna have to wait and see how it shakes out. But I think that this is going to be it has the potential to be as bad as Luna, just given how big it was. And it's arguable that FTX was even bigger than Luna, because even though Luna had an official joint market cap between UST and Luna of I think it was like 60 billion at its top or something. The thing is with those market caps, that's not all real money. That's all this, because the way market cap works is just price times circulating supply. But it's not like you need $60 billion to go in to get to a $60 billion market cap.
Yeah,
it's actually way lower.
Yeah, maybe you should explain that, Mark. I don't think a lot of people necessarily understand that the actual market cap is not the number of dollars invested into this.
Right, yeah. I mean, I think the way that I think about it that is kind of intuitive is let's imagine that you had a token that had a million of it circulating supply, but that a bunch of people came in. There's a huge amount of demand that comes in, but then let's say that only a handful of people are actually willing to sell, and so you're only getting, let's say, 1,000 of the tokens being sold. Well, then for all that demand that wants it, they're going to bid the price up of those 1,000 tokens like crazy because it's the only ones they get their hands on. And then what that's going to mean is that some relatively small amount of money can come in, jack up the price of those 1,000 tokens that are passing back and forth, while everyone else is holding on to theirs. But then suddenly with market cap, you multiply that now elevated price based on this really kind of small amount of activity across that whole $1 million. Suddenly it looks like this project is worth a ton of money, when in fact only a relatively small amount of money got injected to boost the price way up. And so that's where they're not one-to-one, because it's really about supply and demand imbalances, and anything that'll move the price massively can shift the market cap to a larger degree than the amount of money that actually changed hands to push it there. I don't know if that's a good explanation, or if you have a better explanation, Jay.
Yeah, no, I like to think a good another easy way to think about it is think about the Satoshi coins. He spent $0.00 on those coins, and he has $1 million of them. They're each worth, let's just call it $20,000.
Right.
So that isn't money that was invested into the crypto market. So whatever a million times 20,000 is, what is that? I don't know,
What is it?
2 billion or whatever.
Yeah.
Probably more than that, 20 billion or something like that. Yeah,
it's
it's 20.
Reasonable amount of.
Yeah, it's 20, whatever, 20 billion or whatever it is. I don't know. That's not 20 billion that was invested into Bitcoin. It's 20 billion that he's quote unquote worth, if he were to sell those. Granted, you could never sell 5% of the token supply instantly and get that same price, because if you're, instantly trying to sell a billion coins, or a million coins, the price is going to plummet. So essentially, yeah, I think because of that, the actual real value being lost with FTX is absolutely orders of magnitude larger than the event that played out with Luna UST. In addition to the fact that that was a single cryptocurrency, this was something like the equivalent of I don't know, whoever the second biggest bank is. I think JP Morgan's the biggest, but it would be like whoever's right under them going under, and then the owner maybe or maybe not fleeing to Argentina and stealing the rest of the money from the bank that was meant to be given back to the customers who lost their money, because he built a back door into it. This is just a shit show on a grand scale. I think this is the type of event based, the whole way that it played out, where CZ sort of initiated the eventual downfall of an already corrupted system, and then all of the drama behind the owner. I mean, this is a Hollywood movie. They'd be tough pressed to write a movie like this.
Yeah. They're gonna make a video about, or a movie, or like a documentary or something about this at some point. It's too ripe for the picking.
Yeah, I think that this has both real and unrealized ramifications for the market that are far-reaching, way beyond the Luna event. And I think that's another thing people don't realize, because the price of the crypto market fell more with the event that played out with Luna. But this, in terms of its impact, I think is going to be much larger than that single event with Luna.
Yeah, I 100% agree. And it's one of those things. I mean, I think what has happened with this as well is I think we're starting to now enter into the phase of crypto is dead narrative, which and people take that different ways, right? A lot of people see it as a bottom signal, that when everyone says it's dead, then that's, the time to get in. But obviously you can argue that, the flip side of the coin, you could argue, that perennial saying this time is different, because, this time we had FTX pull off, which we've never had anything like this happen before. But I do think, if you can see any positives in a long-term perspective, if you are someone who thinks that Bitcoin will ultimately continue to exist and then eventually reach new all-time highs, the long-term perspective of where we are right now is that we might not be at the bottom. I personally don't think we are, in light of what's going on here. But what that means is that, for everyone who was FOMOing in 2021 and earlier, you're basically getting a second shot at the apple, but then most people aren't going to take it, because that's what everyone forgets about bear markets, is that the places that are most profitable are the places where no one wants to pull that trigger, because it feels like you're throwing your money away into something that's going to zero. And so obviously it's up to everyone to make that decision of, do you think it is going to zero? Because then of course you are throwing your money away. But to the extent that historical patterns play out, it's always the time where it feels the worst that it ends up playing out the best. So I'm not going to make any strong predictions. I think we're going to have to wait and see how bad this fallout is to really make any long-term assessments of, when the next bull market is even possible. But it is just something that I've also just tried to keep in mind as well, because it's kind of the only positive thing you can even come to mind from how bad this situation is.
Yeah. And one quick thing I wanted to mention about the Bitcoin dominance. The Bitcoin dominance is no longer by itself, and this is something I've talked about in prior videos, but I think maybe you have as well, Mark, but it's no longer by itself an accurate measure, because in 2017, when you sold your Bitcoin, you held your money in cash on the exchange if you remained on the exchange, if you were sitting in cash. In 2022, there's a high probability that you're going to sell for USDT so that you can move those funds around to anywhere you want within the crypto market. And so that USDT contributes to the total market cap of the cryptocurrency market. So a couple points here. A, the crypto market cap is actually much lower than it appears. It's not the 800 million. It's closer to probably 600 or 800 billion. It's probably closer to 675 billion or so, because back in 2018 you had to move into cash, or back in 2017, 2018, early 2018. Now you have the option of moving into USDT. And so when you remove those factors, and I'm only saying this because if you're trying to compare apples to apples, you can't include the stablecoins in the equation. And so when you look at it, the Bitcoin dominance is actually much closer to 50% than it is the 40 or 39, whatever number you see when you look at the traditional Bitcoin dominance level. And so I think that's a factor that a lot of people don't consider, in addition to the fact that a lot of people don't consider the fact that the market cap is significantly lower than it's even stated as now.
Yeah, I think that's a very good point. And yeah, that's something that a lot of people have, I think, have ignored about Bitcoin dominance. One thing that came to mind, I mean, this is pivoting a little bit, but it was related to stablecoins. And I was curious to get your thoughts on this, Jay. I mean, we kind of brought it up already, but with when Binance was saying that they might acquire FTX, before obviously how bad it was, Kindle-like, my initial reaction to that is that this is not good for the crypto space, because all it does is centralize power even more into the hands of Binance than already is. And when you think about the reach of Binance right now, it's kind of terrifying, because not only, as you say, are they the place where all the volume happens, they also have, I think, now the third biggest stablecoin, and it's growing massively because of
Right.
what they did by getting rid of USDC on their platform and basically converting all into BUSD. They have one of the largest L1 ecosystems out there on the BNB network, the BNB smart chain. So if anything happens to Binance, as you're saying, it's lights out for crypto. And so I'm just curious your thoughts. Like, do you think that we're just doomed from that perspective? That more likely than not, with a centralized entity, they always blow up eventually, without any regulation, there's no one to protect them. Is there anything that we can do, or are we just on a ticking clock here until something happens that blows it all up? Because it seems like Binance has just captured such a massive share of this market. It's not decentralized; it's one entity that really is it.
So I would feel better if Binance were a publicly traded company, because at least that way we would get a look at their books and have a better understanding of, because who the hell knows if Binance is leveraged out of their ass also, like we like we find out that all these other, we don't think that they are, but we also don't think that FTX is, and we don't think that Celsius is, and we don't think that Luna, the Luna what was it, the LF Luna Foundation Guard or whatever the hell it was, they're buying Bitcoin, they're collateralizing, this is great, and right as they're doing that, they're in the process of tanking. Right. So Binance is the existential threat to the crypto market, hands down. Mm-hmm. If that does go, then, I think first of all, you're right back to Bitcoin and maybe Ethereum are your only two assets worth anything, mm-hmm. And people might argue that that's the real case as it is, that they're the only two assets worth anything. And then, the Bitcoin maxis might argue that Bitcoin's the only thing actually worth anything. And you probably have ETH people saying the same thing about ETH, but all of these altcoins go to zero, literal zero, right? Or as close to it as you can get, because there's no market for them anymore. And, if it does turn, in addition to that, Binance is this nebulous, multinational, they don't have a place of origin. They don't have a home office.
Yeah.
So no one's really giving them oversight. They're just kind of doing whatever the hell they want. And the
Yeah.
only regulatory framework that they operate within is whatever they have to do in order to operate on the key markets that they want to continue to operate on. Right.
Right.
So Binance US can't sell tokenized assets, for instance. They can't sell tokenized Google. So they don't do it. They're not allowed to offer leverage positions to American traders. So they don't do it. They just avoid the things that they're not allowed to do and then put out a front end specific to the US. But then in all these other places, they're doing whatever they're allowed to get away with in each individual place. And
Yeah.
so you have this company that's basically operating unchecked as the not only the backbone, but the backbone and the nervous system and the circulatory system of the entire crypto industry. And if that were to go, then yeah, it's over. It's over for, and that's not just hyperbole. It's over if it goes, because everything happens on Binance. And like someone said, if Binance goes, Coinbase goes. Coinbase might go anyways. I mean, they haven't, been drumming up business. They've been losing business over to Binance.
Yeah.
So,
Yeah. I mean, at least with Coinbase, at least because they're publicly traded, there's no, immediate risk right now that they're just gonna go under because, they have to be transparent. So that is and that's actually something that people have been talking about a lot with in this FTX debacle is that, not that anyone's recommending custodying assets on centralized and places, but probably the safest place right now is Coinbase because it's clear that they're not, leveraged out of their butts and likely to just implode like FTX did. But it is true, like you're saying, that if Binance goes, the whole market goes. So there's no exchange that's going to just be immune to that, and probably most of them go. And it's just whether or not there'd be, enough interest for people to try to grow it out of the ashes, or if that's just it, and there's no interest in the space. I mean, when I was thinking more about it, I guess maybe the best that we can hope for is that we just get some actual competition in the market. Like, I mean, the thing is that Binance is such a monopoly now that it might be hard to even do that. With them getting rid of trading fees on Bitcoin, for example, is just clearly an effort by them to steal more market share from their competitors and just centralize their power even more. So unless other entities can manage to do that too, it's just awfully hard to compete. And so, yeah, we'll have to wait and see. I mean, I guess the best hope we could have is that the next bull market comes around and that there's just enough money sloshing around that other competitors can actually take up some market share. But yeah, it's very worrisome. So
Binance right now, they contribute, let's see, in a market has a market cap of whatever, it's 851 right now. They themselves are contributing an additional, they're about 10% of the total crypto market cap based on their two assets. So, in addition to all of the market liquidity going under, you lose what is currently and has been gaining ground, rapidly gaining ground. You essentially lose an additional 10% of the market cap. So,
right. Yeah. Yeah. And that's the thing, like, in some ways that kind of worries me because it feels like, I mean, this is not like rational thought, but it does just feel subjectively like all of the centralized things that have had that meteoric rise and started grabbing up market share are the ones that are then fall the hardest. Like Luna was unbelievably impressive at that stage right before it blew up. And then, of course, it crashed everything. Celsius, etc. FTX, they had kind of impossible growth. I mean, we know now how they had that growth. It was the same kind of story. I mean, the only thing with Binance is Binance has been around for a long time. So if they were being completely irresponsible, it's probably more likely than not they would have just blown up in the last bear market. And so you would hope that they haven't just changed their practices to be even more risky now, but you never really know. They did say that they're going to start doing proof of reserves, which is a good sign if that's actually something they're able to do both on their assets and their liabilities to show that they're very much solvent and that there's no problems.
Well, imagine just that points out the perfect illustration of the problem with the crypto market. This thing has a $23 billion market cap, and we don't know what their reserves are.
Right.
Just, okay, we trust you. We trust you because you're Binance. That's what we're doing, essentially. And I'm just as guilty as as anyone else is of that, but that is a problem. I mean, it's a problem that we're willing to USDT and USDC until recently have had, corporate debt, and we don't know what corporate debt is it? Are they Chinese real estate companies? Like, what if if the Chinese real estate industry went under, and then all that corporate debt's worthless? Hell, even the U.S. Treasuries, depending on what time frame they were holding, those essentially lost 30-40% of their value or whatever over the last couple months. So, I think the fact that they operate without transparency is a massive problem. And if they want to continue to shore things, I think what they're doing essentially is trying to get things in line so that they can present what their reserves are, because they probably do have overexposure to a lot of things that aren't going to be appetizing when they come to light.
Yeah, for sure. I mean, and that was the thing. I don't know if you had seen this when it was happening. It was fairly brief this time around, but Tether did briefly depeg, and it just felt like really, is this like going to be the thing that happens? Because that's the other thing. I feel like just like if Binance goes under, the crypto's dead. If Tether falls apart, maybe not quite. Maybe it doesn't kill it to the same degree that Binance would, but it would still be a devastating fail. I mean, because think of how many things are collateralized in USDT. If that suddenly went to zero, kiss everything goodbye. And that's, supposed to be actual money. So it's supposed to be actually like $60 billion, more or less, that would just go, evaporate, in an instant if that were to happen. I mean, again, with Tether, because they've been tested so many times, you'd hope that, it's not bad enough for that to happen, but certainly concerning the lack of. And so that's one of the regulations that I actually think it would also be useful if it is the case that, the regulation gets passed that makes it so that you have to have, proof of reserve and regular audits if you're issuing a stablecoin. I just think that would be an objectively good thing for the market. I don't really see any downside to that for these centralized stablecoins. And that's actually one of the ones that's in the pipeline.
The individual shouldn't accept a stablecoin that doesn't post completely transparent proof of reserves. Because if you're putting your money into, you're saying this is a 1-for-1 trade, dollar for dollar, you want to know that it's backed by something and not just this isn't like Binance isn't like the government that, you're not going to have any assurances from them. So having at least the assurance that it's backed by something, it should be the minimum gold standard that we require of these types of companies. And I do think almost in a sense, things like this happening with FTX, to put perhaps things in a more positive light, maybe this is a net positive in that sense, in that people will no longer accept this bullshit where, we're just, we're doing like whatever, and we're not going to tell you what it is we're doing. And, there's from a centralized source anyway. And you just have to take our word for it that everything is on the up and up, because 9 times out of 10, when we don't know what's going on, shady things are happening in the background.
Yeah, absolutely. And that's the thing where, I mean, my worry about it is like, I think everyone who's in the market right now will adopt that attitude. But the problem is when the next bull market happens and then, new people come in who weren't paying attention, haven't lived through this, they'll kind of not have any, they won't care, they're just going to blindly trust. And then even people who are around now, memory tends to be shorter than it should be in crypto, will, forget the lessons that they learned here and will do the exact same thing, which just makes it feel like there has to be something more to break this cycle. Because it just seems like every single bear market this happens, there's some massive catastrophic event that crops up because of this lack of transparency in some kind of centralized system. And so that's where I personally, there's a lot of talk about regulation in the crypto space, and the knee-jerk reaction is very negative, but I think that there's some regulation that would actually be a positive and might help us head off some of this for the next time around. who knows if that'll happen? And that'd be assuming that's actually good faith regulation. But I don't know, I think people need to have a more open mind about that to some degree.
Yeah, I mean, at minimum, I don't think there's a problem with regulating the centralized exchanges. By default, they're centralized. So, you could never truly regulate the crypto market, the DeFi market, because if, I guess at the end of the day, if, they can regulate DeFi, but they can't actually regulate it. If you want to play the game and if I want to be able to type in your website on my browser in the United States and go there, you have to play the game. Yeah. Now, if I use a VPN, I can still get there, but if you don't want people to have to go through those loops to get to your site, then you do have to play the game. But at the end of the day, if you don't want to go through the official channels in order to be able to list your company and have U.S. investors legally buy it, then you can still do whatever the hell you want, but it's just people may not be able to freely access it.
Yeah, so absolutely.
I think as far as the centralized industry goes, though, I think regulation, it's apparent at this point, they have to be regulated. They have to be. They can't just continue to lose people's money because they're taking these ridiculous gambles. And there are obviously people that don't know anything. They're as uninformed about the crypto market as, Plan B is. They're coming up with these ridiculous models that have no bearing in reality. They have no sense of the macro environment. And it baffles me how if I had, do you know the team of quantitative analysts that I would have working in my basement with me right now if I had $5 billion? And these guys, they're literally, it's like they're going on Invest Answers and getting their financial advice from him and going with it, because the moves that they're making are just absurd.
Yeah,
and we see them doing it over and over again. So
yeah. So there's one thing I wanted to follow up with on the chat. I totally agree with you. And so in the chat, there was a comment about, are DEXs maybe one of the solutions to this, or is there a crypto solution? And I think the way I kind of think about it is very much in line with what you're talking about, Jay, in terms of centralized entities need regulation, and it makes sense. But in some ways, then the decentralized ones that are transparent and auditable, you don't need regulation for that because it's already inherent to the system. It's already inherently the case that the code is there and anyone can look at it, anyone can make sure that's not wrong. Right. I mean, that's the thing, was like with Luna, Luna blowing up was not a surprise in the sense that people knew this was a possibility. What was a problem was that not enough people got educated to it and not enough people necessarily knew it was there. But I was listening to podcasts months before it blew up where they were talking about it. And it was very much on my radar that this was a part of the system. But that's the thing, it was transparent. It was literally right there. Everyone could see that this was possible. And so, maybe in a utopian world, we'll get to a point in blockchains where interoperability gets so good that you don't really need these centralized exchanges as much, where you can, go and do more of this stuff in a decentralized way. And it kind of takes some of that, volume off of those and puts it into these places, especially if we can get, fees to be cheaper and usability to be higher and stuff like that. But that's, I think, still probably years away for that to be ready. And so unfortunately, in the short term, I think we're stuck with these centralized entities that are going to present systemic risks unless something's done to kind of rein them in and make sure that they're not, acting like FTX was.
Right. Yeah, I completely agree. I think something has to happen. And I think that this event likely will lead to there being change, and whether that ends up being good or bad is we'll have to watch over the next, the way things like this work, they usually take months, if not longer than that, to kind of come to light. So I guess the last thing, a good thing maybe to wrap up would be, what do you think specifically on one altcoin here? Because I think it was kind of at the not directly at the core, but directly adjacent to it, was Solana, because it seemed like FTX or, Alameda had a huge stake in Solana. So I know you have some interesting takes on that. And I think, there are things that people aren't really talking about.
I'm curious to hear your thoughts as well. So the interesting thing about Solana is that it got artificially bootstrapped by FTX and Alameda. Kind of, they were the biggest supporters. A lot of liquidity got pumped into it, and they're a big kind of part of that. But then one of the benefits that Solana got from that was a lot of development on it. So there are a lot of developers who build projects on Solana. A lot of interesting projects that are kind of first of their kind, like order book based dexes, which is not really possible in a lot of other chains, but Solana is fast enough to be able to do it. So some really interesting innovation that was happening there, and some actual network effects starting to form. Now, of course, the problem is that Solana has now lost that backing. It's gotten rug pulled, and then we've already seen all this forced selling from Alameda and probably FTX of Solana dump the price down. And so, I think the one hot take I had mentioned before we started recording, but I do think it would be interesting if this plays out. I think short term, personally, I do not have a positive outlook on Solana's price. I think that there's a lot more contagion to happen, a lot more forced selling that's probably going to happen. That's going to bring the price down lower. So it's not one that I'm seeing as being, some kind of sure bet to, catapult to the upside anytime soon. But what I do think could happen with Solana is that it kind of goes down, finds some bottom. But if enough of that actual network effect persists and enough people still keep building on it and actually innovating, because, Solana, for its problems it's had, it has a lot of potential given its speed. If they can work out all those kinks before the next bull market, it has potential. It might actually be able to pull out from this. I think there is an argument to be made that it can't, but I do think that watching activity on the network will be important. And if that remains elevated, I actually think it's possible for it to come out and frankly be better off, because we also know within the Solana ecosystem that Alameda was doing all sorts of predatory garbage to dump tokens on people and, makes it basically, just suppress asset prices and kind of kill off the ecosystem. So it might be better off long term. But I'm also curious. I know you had thoughts also on this. I'm curious to hear your thoughts.
Well, my question is, so they still have the Solana tokens. They're still, until for the time being anyway, they're locked, as I understand. A good majority of them are. They're going to transfer to someone.
Right.
Right. Whatever happens in the bankruptcy proceedings here. And whoever they go to, essentially, they're just going to continue to liquidate per schedule, because they'll be using that to raise cash to try and, when this goes to whatever the bankruptcy litigation, whoever sequesters those funds, they'll just continue to liquidate them in order to raise the funds to pay off. But so I don't know if it will necessarily... And I'm just kind of thinking about this as we're discussing it here. This isn't like some thought I've had in the past. So I guess I just don't know necessarily that will change anything in that regard. But, not having Alameda around, I don't know, because I feel like someone's just going to come in and replace Alameda. Kind of like we were discussing at the start, like Alameda and A16Z and a couple of these other institutions. They basically make it so you can't make money on ICOs anymore because they own all of the asset at a price that's 1/50th of what you own it at, or whatever it releases at. And then they just, their 1% unlocks every week on average, or whatever it is. And they sell that and they sell that, and they just continue doing that because they're at, in such a large profit that it only makes sense for them to do that. But I think that those kind of VCs like Alameda have been really making it harder for the retail investor to make money in the crypto market, especially, people trying to get in on new things. Because go look at any coin that you can think of and look at its first 6 months following its ICO. What happens in almost unanimously, they tank. They pump for like the first day, maybe. And then after that first week or so, they tank and they're all down, 50% or more. In fact, that, what was it? Aptos, or I think that's down right now. I don't know exactly where it's at the moment, but it for a very short amount of time, it was pumping. And, I'm not even sure what its market cap is right now, but we could see here real quick. Yeah. So it is sitting right at $4.55 now.
Yeah.
So, you know, and
Half of where it had been trading at certain
what's
points.
that, Mark?
I think that's at least half of where it had been trading at
Yeah,
some.
exactly. It launched at, you know, right at around $8, it looks like $8.50. So it's down around 50% now. And this is ubiquitous. This is what always happens,
Mhm.
because it's just being sold by the early backers,
Yeah.
right?
And the
So
other problem too is that those early backers, it creates an artificially large market cap at launch, which naturally
right,
limits any upside that's even possible. You know, like back in the day before this kind of thing happened, if it's more fair launch, you're starting from essentially nothing and then you're growing out from there, which just means that early adopters have way more upside that's possible. But if you're starting at a launch of, I think Aptos started at like multiple billions market cap, and maybe as much as like 6 billion. Like that's already massive. And so like, and especially in a bear market, there's no realistic upside you're going to be realizing getting in on a 6 billion market cap asset in this environment. So it's yeah, it's absurd, and it just takes money from retail and puts it into the pockets of those institutions.
yeah. And so to kind of circle back to the primary question, like for Solana, you know, I do think that Solana has, first of all, Solana has had such a run of bad press throughout 2022. What I think, in even the end of 2021, I think it's been down probably 6 times now or so. There've been hacks on peripheral apps related to Solana, not necessarily directly on Solana. And now this, I think this is going to act to suppress its price at least, you know, over the next months. To basically, I don't think Solana, you're going to see it, you know, making any kind of substantial progress in terms of price action in the bear market. But again, what I always come back to is it's about users and use case. And outside of Ethereum, Solana does tend to be one of the assets that has, you know, at least from a theoretical standpoint, it has the technology in that it's fast and can support a high number of transactions per second. And it does have users, it has apps built on it, and it has, you know, a use case. And whether you believe in that use case or not is another question. But it has those primary factors that I look for in an altcoin and trying to decide whether it's a worthwhile investment or not. So in the long term, I do think that Solana does have more potential than a lot of these other assets. And, you know, something like, and I'm not trying to compare the two. It's just the first thing that pops into my head, but like Near Protocol, it just doesn't have like the same type of adoption. So it doesn't, you know, let's call it XYZ protocol. If it comes out and it has the best technology in the crypto market and it just absolutely destroys everything else. If no one's using it and nothing's built on it and no one's talking about it, it doesn't matter. It doesn't matter how good your technology is if no one's using it. And Solana has that key ingredient, if nothing else. And I do think it does have those other things as well, but it has actual users. And at the end of the day, that matters. So, you know, we'll have to see if a lot of this negative press kind of hurts that, and maybe it does. We'll have to see. But from where things stand at the moment, I do have a long-term positive bias towards Solana, and I know people like to think in terms of binary. It's like you're either actually all in, or you either think it's the greatest thing since sliced bread, or you hate it, and that's not how it works as an investor. You can have a bias towards something, but have the realization and even the potential expectation that things don't live up to your beliefs, your belief set about the investment. So it's a probability distribution essentially. And
you always gotta hedge your bets.
Yeah, exactly. Yeah, or at least you be willing to accept the fact that you're not wrong and not be definitive about your statements about something and saying that Solana, it's the greatest thing out there. You know, look at the users, look at the use cases, look at all the NFTs that they're trading on it. Okay, so we can look at that now and say that, hey, Solana looks like the ingredients are there. and have a positive outlook, but that doesn't necessarily mean that's going to come to fruition. Maybe it goes down again for a week, and then maybe things start to change from there. So
Right. Yeah, totally agree.
so anything else? Do you think there's any last words you want to impart? Any last pieces of wisdom?
Yeah, well, I guess all I would say is just try to keep a level head through all this. And obviously, my heart goes out to anyone who was directly affected by FTX and that collapse, or anyone who lost money. I mean, it's something that is unforgivable that they were basically committing such egregious fraud like that. But then also, just to keep a level head, and like we always say on our channel, just stick with the data. That's the best way of making decisions, in my opinion, in the crypto space, not based on emotion. And who knows where we're going to go from here. But the time to despair is I mean, the time to act is usually not when things are the most fraught with emotion, usually in the
Right.
crypto space.
Yeah. And so maybe the last thing, well, we could save this for next time actually, but we could just quickly mention it at least. So if you guys don't know, Mark and Joe, me from DCA and those guys from Upside Down Data, we've actually been working on a website now for quite longer than we'd hoped for, but I think it'll be worth it when it's all said and done, because we're creating something where you're going to be able to interact with the data in a way that you can't do in a lot of other places. So we're going to have all the risk metrics. We're going to be putting out articles, research, that type of thing. And I think there's going to be a lot of unique things and interesting things on the site. I was going to show the site now, but I think I'll wait till next time, because there's just a couple of things that we're trying to shore up before we officially launch. But that should be coming probably, I don't know, pretty soon here, pretty soon. I would say definitely within the next month or so, we have at least something out there. I don't think the final product necessarily will be out in a month, but we're going to try and get the mobile site out there, and all the risk data will be on there. We're going to try and have economic data up, a lot of the crypto data, hopefully on-chain data, although trying to find sources for the data are actually more difficult than you would expect. So we'll see, but it's is the site going to be in OnlyFans? Yeah, Mark actually is going to put out naughty pictures on.
It was naughty risk models, so it's just
yeah, dirty risk models that are telling you things that are worse than you believe that they were. So
yeah, it's one that tease you all the time.
Yeah, it's a what do they call that? It's like a masochism site.
Yeah, so, right. Just reminds you of all the losses.
Yeah, well, so Glassnode, you can't put Glassnode doesn't sell their API for, you're not allowed to use it for commercial use, or you can't put something out there that you're like distributing, I guess is the bottom line. Yeah. So that's going to be it, guys. I think it's good to be back. I'm glad to make a video again, and thanks to everyone for stopping by as usual. And be watching for the website, and we'll probably do another stream here probably right when we're about to launch. So good to talk to you guys again.
Jay, appreciate it, and thanks everyone for coming out and listening. Yeah, it's been a good discussion.
All right, guys, well, until next time, as usual, see you.
Bye, everyone.
Oh wait, I don't know how to end the video, so oh, there we go, end stream. All right, now see you.
Good. Let me go on YouTube just to make sure.